Yes, the Bitcoin ETF launch was historic. Yes, it helped pump BTC past 100k, and yes, JP Morgan does estimate that a spot Solana ETF could eventually unlock $3 to $6 billion of capital. Now, many are hoping it sends SOL flying back towards $300. But here's the bitter truth. The Ethereum Spot ETF, which only launched about 6 months after Bitcoin's, turned out to be a complete nothing burger. The hype didn't translate to any sustained rally, and ETH maxis are still waiting for a new all-time high. So today we're asking a very simple question. Can a spot Solana ETF actually rescue SOL and push it anywhere near $300 in 2025? Now, I know what you're thinking, hold up, why are we even talking about Solana ETFs right now? I was quite happy doom scrolling through Studio Ghibli versions of literally every meme under the sun. I know, most people are in the same boat, but the simple answer is this. Solana's price has been absolutely crushed for about 2 months straight, and people are rightly wondering if we are already in a bear market. Even though technically a bear market is defined by a 20% drawdown, which we have certainly seen, it's not exactly clear to people which way we're moving right now. And if we're not in a bear market, then what exactly is the catalyst that's going to get us out of this range and push us up towards new all-time highs? Right now, people seem to be pointing at the Solana Spot ETF approval and new liquidity coming in. So here's everything we can find around the ETF progress, how much capital it could really unlock, and most importantly, when all of this can actually transpire. Context first. The Spot Bitcoin ETF, which launched in January 2024, was one of the most bullish catalysts in crypto history, because we saw over $10 billion of inflows in about 2 months, which eventually helped in pushing BTC from around 40k to over 100k before the end of 2024. It was by far the most successful ETF launch ever, and it changed the institutional conversation overnight. Then it was Ethereum's time to shine. Spot ETH ETFs did gain momentum in mid-2024, but the effect wasn't quite the same. Regulatory headwinds and market conditions meant the rollout was a bit slower and the rally faded quickly. Solana is clearly next in line, and it has been since this time last year, not just because of its growth and performance, but because of what the network represents: the high throughput, growing adoption, and serious institutional momentum, a decentralized Nasdaq. And we already see this with exchange-traded products continuing to launch in Europe, with institutional interest in staking, the White House crypto and AI czar being involved with Solana from the early days, and of course the White House actually hinting at SOL being part of a potential strategic crypto reserve as well. Solana's obviously come a long way as both the network and as an asset, and it's undoubtedly one of the top crypto assets. We already know this, but here's why the timing is important. Because price-wise, SOL has taken an absolute beating. It's down massively from the January highs of over $290. That's about a 50% drop, which incidentally also means there's room to run, because as JP Morgan puts it, a spot ETF could potentially bring in $3 to $6 billion of inflows. Now, when you combine that with factors like falling inflation, money supply rising, and climbing DeFi metrics, you've got a potential breakout setup. Alright, so here's all the latest updates around the Solana ETF approval and why the market gives it an 88% chance of happening this year. So, volatility shares first. Those guys made history recently by launching the first ever Solana futures ETFs. They're called SOLZ and SOLT, and these give traditional investors regulated exposure to Solana price action. But most importantly, they fulfill a key requirement that the SEC has cited in past approvals: a regulated futures market. Some analysts, like Eric Balchunas, have previously said that no spot ETF would go through without a futures ETF. And if we think back to last year, that was indeed the case with BTC and Ethereum spot ETF approvals. So now that that hurdle is finally cleared for Solana, and the SEC has acknowledged filings from firms like Franklin Templeton, that 88% estimate could continue to get higher. Now, if you come this far and you get any value from the work we do at Solana Floor, or you just want to stay updated on the Solana ecosystem, then please consider subscribing or just liking the video. It's only one click and it really helps with the algorithm. Thank you. Now back to the exciting stuff. Here's a super short rundown of the key developments that we've seen recently. On March 25th, Fidelity, Fidelity, the world's third largest asset manager, filed for a spot Solana ETF. And this came only days after news of the Fidelity Solana Trust in Delaware broke. That same trust structure was used by Franklin Templeton when they filed their full ETF proposal just 11 days later. And if at this point you're wondering whether BlackRock, the world's largest asset manager with over $10 trillion of assets under management, is going to be next, well, they just might be. Because only days ago, BlackRock's $5 billion Biddle Fund officially launched on Solana, which of course reinforces institutional confidence in the entire network. So let's look at the prediction markets and analyst odds here, and how likely is this really? According to Polymarket, the odds of a spot Solana ETF being approved by the end of this year are now 88%. That's actually higher than most people realize, and it's being priced in gradually, because the SEC's formal deadline for reviewing everything and making a final decision for applications like Grayscale's is clear. It's October 16, 2025. That gives us a clear window to track, and with new leadership potentially under Paul Atkins, plus the clarity that Hester Peirce has brought to the table, the likelihood of a 2025 approval is very high. So here's VanEck's head of digital assets research, Matthew Siegel, speaking at last week's Digital Asset Summit.
You know, Hester Peirce has a lot of questions that she's put out to the community that we're trying to answer. Still think the odds are quite strong that by the time that October deadline comes around, those questions are ironed out and there will be spot SOL ETFs.
So with a clear timeline till October, the major hurdles out the way, and an 88% likelihood of approval, the pieces are falling into place. We have Fidelity's trust and ETF filing, Franklin Templeton and VanEck already in the queue for a spot ETF in the US, Bitwise, VanEck and 21 Shares offering Solana exposure in Europe, BlackRock and Securitize bringing Biddle to Solana. All of these signs point to us no longer being in the if stage. The TradFi capital is lining up, and here's what the TradFi peeps are thinking.
Even JP Morgan earlier this year had an estimate that if Solana spot ETFs launched, they might haul around 3 to 6 billion in the first 6 to 12 months. So the fact that JP Morgan has an estimate means they're looking at this space.
So what's realistic? Let's talk price. Yes, SOL saw a bounce when volatility shares launched their futures ETFs. Yes, the ETF narrative is strong, but let's be honest here, this doesn't guarantee an all-time high before the end of the year. In fact, Polymarket currently gives Solana just a 15% chance of hitting a new all-time high by June 30th. Even in the most parabolic parts of crypto cycles, we know that there will be volatility and major drawdowns.
But when you look at the previous parabolic peaks to this market, so 2021, 2017, these were great years to be in Bitcoin and crypto, but you'll see 5 to 7, 10% corrections and at least one 30 to 40% drawdown. So definitely expect the volatility to continue.
And as for those viral price predictions that we saw on the timeline when prices were actually peaking, we need a minute here. Because without throwing any one publication under the bus, we have seen tweets like this, claiming SOL could hit $6,000 this cycle, or even $41,000 eventually if it reaches gold's market cap. Now let's be real here. These predictions do more harm than they do good. They lead people to overextend, FOMO in, and top last, only to end up selling at a loss when reality hits and bills are due. Perspective matters, so let's compare SOL, ETH, BTC, and gold to see if these price targets are in any way realistic. Solana currently has a $67 billion market cap, ETH is at around $230 billion, while BTC's market cap is under $1.7 trillion. That's less than 1/10 of gold, which is at about a $20 trillion market cap. Now, all of crypto combined isn't even $3 trillion. So the idea that Solana alone could reach gold's market cap anytime soon is frankly absurd. Even if every single dollar from that JP Morgan estimate of $3 to $6 billion flowed straight into SOL, we wouldn't hit $300. Yet, experts like Matthew Siegel think Q4 could still be extremely bullish for alts.
I think we're just in that air pocket now where the macro environment has changed, and while we're anticipating a lot of regulatory relief, we need to see the no action letters start to come. We need to see the ETF approvals start to come. The combination of those two together, I think, will lead to a pretty ferocious rally in Q4, you know, knock on wood, but we're not there yet.
So be cautious, manage your risk, and most importantly, don't let the hype and the euphoria cloud your judgment in this part of the cycle. So what now? Here's the takeaway. A spot Solana ETF is closer than ever, and institutional players are ready to deploy huge amounts of capital. But we've seen how the hype around ETFs can sometimes fall flat, and the price targets you see online can sometimes be absurd and baseless. So yes, the spot Solana ETF will likely drive prices higher. But no, it probably won't send Sol to $300 overnight, let alone the outlandish target of $6,000. Be smart, stay grounded, don't bet with high leverage in a volatile market. Now, it goes without saying at this point that none of the information in this video is financial advice, legal advice, or any kind of advice. It's mainly for entertainment and educational purposes. You should always do your own due diligence, and particularly so if you think you might need that capital soon. I want to thank you for tuning into Solana Floor, and I'll see you next time for more updates from across the Solana ecosystem.